You probably pay fees to invest in your retirement plan at work, but you might not know how much you pay or even how you pay those fees. And this is important because any costs are going to reduce the amount you have left over for spending. So we're going to talk about what those costs are, and we'll go over a couple of tips on how you can reduce the amount you ultimately pay. We'll start with investment expenses, and these are the fees in the underlying investments that you pick in your plan. So that might be a mutual fund or an ETF that the money goes into. Those have annual investment expenses, and different options have different expenses. Typically, your passive options like an index fund are going to have the lowest expenses, but other options like actively managed funds and even overseas investments might have higher expenses. So you have some control over this, which we'll get to in a second, but you also want to keep the big picture in mind and have a diversified portfolio that matches your needs. There are also record keeper fees. So the record keeper might be the company that offers the website or the vendor that your employer uses for the 401k. So whenever you get statements or you log in to make changes to your account, that's probably with the record keeper, and they charge fees. In some cases, that cost is going to be a percentage of your account balance that comes out each year, and you might see that transparently, or it might not be so easy to find. It can also be a flat fee that comes out every month or every quarter. Administrative fees might be part of the record keeper's fees, or they might be separate if you have a third-party administrator. But these costs are going to cover services like reporting on the plan each year to the IRS and getting the legal document, doing some non-discrimination testing to review how the plan performed over time, processing distribution requests, and a number of other things that happen behind the scenes. In some cases, your employer pays administrative costs for you, which is always nice. Then there are consultant fees, and that might be for a financial advisor or some other type of consultant who is helping on the plan. That might be charged as a percentage of the assets in the plan, or it might be a flat fee. Again, it just depends. If you are paying fees to a financial advisor, be sure to take advantage of that service and ask them questions about retirement, get some guidance on which investments might be appropriate and how much you need to save, and that way you're getting the most out of your money. Some plans also charge transaction fees, and these are kind of rare, but it just depends. If you take a loan, for example, you might have to pay an upfront fee for getting the loan and then an annual fee for servicing that loan or keeping track of the loan payments. You might also pay transaction fees if you do short-term redemptions from certain fund options, for example. It just depends, again, on the record keeper that your employer uses and what their rules are. Another potential fee is an advisory fee. So if your plan offers a managed account option or something like that, there are typically additional fees on top of the fees for the underlying investments that you might choose. Now, this is a good time for a friendly reminder. You certainly want to check with your employer and get some additional information. This is just a start to help you understand what types of fees you might be paying. And by the way, if you want some free retirement planning resources, you can check the description below. So how exactly do you pay fees? In many cases, you don't see it, although things are certainly improving, and your employer should provide a fee disclosure, or the vendor should provide a fee disclosure that tells you exactly how much you pay. In some cases, it's done through revenue sharing. So there might be a fee that goes into the investments you use, or again to the record keeper, and out of those fees they take some money and they split it up, and some of that might go to a consultant or financial advisor, some of it might go towards the administration. It can be really difficult to tell exactly what's going on unless you look very carefully. In other cases, you have line item transactions, and those just show you exactly what you're paying, and that's always helpful because then you know what's going on. When it comes to managing costs, you might have some control, although you don't have total control, and that's because the decisions that your employer makes and the vendors they choose are going to influence the fees in the plan, and the size of the employer and other factors can also affect the fees. But if you're concerned about fees, it's a good idea to speak with your employer and just let them know that you are watching and that you want to make sure that they're doing a good job. Employers have a legal duty to their employees to make sure that the plan is paying reasonable fees. That doesn't mean that the plan has to pay the lowest possible fees, but they do need to be reasonable, and the employer needs to pay attention and not be asleep at the wheel. You can also choose lower cost investments in some cases. So if your plan has index funds and actively managed funds, and either one of those will accomplish what you're trying to accomplish, then you might save some money by going with the passive option. It's important to keep a big picture view though, because if you just pick the investments that always have the lowest expenses, you might not have a diversified portfolio. You might not have the right risk level for your needs. So be sure to keep that big picture in mind. If your plan offers in-service distributions and it has high fees and you qualify to take some money out, you could potentially move that money into an IRA or an individual retirement account that you manage, and then you can choose the investments in that and select lower cost options. And if you really don't have any other options, you can just save as much as it takes to get the match from your employer or whatever you need to do to accomplish certain things on your taxes, and then save any additional money elsewhere, whether that's in individual retirement accounts, your HSA, taxable accounts, etc. But again, keep the big picture in mind as you do that. It's important to remember that if you save nothing because you don't like the fees, you're going to end up with nothing saved, and that's not good for you. So do what's best for you and do the best you can until you have the opportunity to change something. I hope this is helpful. If you liked it, please leave a quick thumbs up. Thanks and take care.